Hey guys, how's it going? Welcome to another episode of 10-Minute Trades, where I basically do technical analysis on a ticker of your choice. For this episode, what I wanted to do was take a re-look back at Penn National Gaming, ticker symbol PENN, and I first analyzed this ticker just over a week ago on September 20th. And since then, obviously we've had a few trading days, we've had some price action, so let's take a re-look at it and see where Penn may go from here. So first thing I want to do is let's just clean up this graph a little bit. And before we do that, let's see how Penn did today. So we were up $3 or a little over $3 today, which is equivalent to 4.4% on Penn. So overall had a green day, but overall today the market was green. So we'll have to see what that really means in terms of this individual ticker. But let's just clean off some of this trend lines here and we'll work backwards. So long-term viewers know the first thing I like to do is draw Fibonacci retracements. So what I did was I drew fib lines from the most recent lows that were back on March 18th, which were kind of peak illness season, to recent all-time highs, which were back on September 18th. So that's what this is right here. Now, this will come back into play because I will draw your attention to right now this 23.6% Fibonacci level, which is roughly at a price target of about $59, about the mid 59s, okay? So just keep that in mind. And then we identified areas of resistance and support as we went along. And as we can see, I thought there were areas of support at about $28, about $38, about $51, and then right here again, right about $59 or so. And I told you to keep this number in mind because this corresponded right to this Fibonacci level here at 23.6%. And I drew that, let me zoom in here, and just as a reminder, these are daily candles, so each candle represents one day of trading. I drew this trend line here because you have the tops of these wicks here for a few trading days, and then once we blew past above it, you have the bottom of this candle and the bottom of this wick here on September 11th and September 14th. So this was once an area of resistance. Once Penn broke above it, it's now become an area of support. Now, the other thing I will draw your attention to is this 21-day moving average is this orange line. The pink line is the 50-day moving average. So one thing I noticed, if I zoom out here, ever since about, let's say early April, Penn has traded very closely with its 21-day moving average. I mean, look at all the time that Penn has bounced off the 21-day moving average. I mean, even when it dips below, it promptly, again, bounces off it, again to the downside, breaks again past above it, and then again continues to bounce off it multiple times as it continues to keep rallying higher and higher. So most recently, as of Friday, September 25th, again, and also the day before Thursday, you can see if I zoom in here, both the wick here and the candle and wick here bounced right off the 21-day moving average again. And then today we had a big green day way up here, way above the 21-day moving average. So this tells me that in the mid to long term, I am overall bullish on Penn. And that's also because I drew this kind of long-term trend line here. If I zoom out, again, from its recent lows in mid-March through some of these candles here up until about early September. And as we can see, obviously this is what you want to see in a stock graph, is that it's always up and to the right. So that's why I say mid and long term, I am bullish on Penn National Gaming. However, I would say in the short term, and when I say short term, I mean maybe the next week or two of trading days, I'm a little bit bearish on Penn because I think it's a little bit overvalued right now. And I'll say that for a couple reasons. I'll draw your attention to this RSI curve here at the bottom. You can see ever since about early August, I mean, for about a good month and a half to 2 months now, Penn has been very overvalued. It's been overbought, right? There's a few times where the RSI has gone above 70. So again, I think we are very overvalued based on the RSI. Now, if my theory holds up that Penn likes to trade along the 21-day moving average, you can see we are quite some ways away from the 21-day moving average right now. The 21-day is at around $63. We closed today about $10 above that at $73. So I think there will be a little bit of a pullback closer to this 21-day moving average, which, in this coming days, if we continue this upward trend, is going to be around $64, $65, $66, depending how long it takes. But I think there will be a little bit of a pullback kind of just how we saw here back on September 23rd and again on September 18th. I think it's just too high above that 21-day moving average right now. Now, the other question is, because it's really hard to analyze data up here because Penn has been setting all-time highs. If I look and scroll out, you can see from about $38 and above, there is no historical price data. We're setting all-time highs, week by week right now. So we are kind of just flying by the seat of our pants right now, trying to guess where are areas of strong support and strong resistance. Now, at the time, I did not have enough data to identify other areas of support and resistance, in my opinion. And please keep in mind that no technical analysis is 100% accurate. These trend lines that I draw are not exact. When I have a trend line at $51, that doesn't mean it's exactly $51.04. I'm saying it's somewhere in that area, right? So $50, $51, $52, somewhere in that price range is what I believe to be an area of support. So again, right now, since we closed today at just shy of $73, my closest area of support that I've identified is pretty much right here by this trend line and this 23.6% Fibonacci level, which is basically around $59, $60. So we have to identify, I think, another area of support that's closer to the share price. So looking at some of these candles, I did see an area right here, and I'm going to draw a trend line, at about $68, $69. And I drew this trend line because here you can see the top of this candle here, top of this candle here, pretty much the bottom of this candle here, the top of this wick here, and most recently today, the bottom of the intraday low, or this wick right here at about $68. So I think right now, $68 is going to act as an area of support. And that's the closest that we have to the trading price, which is a few bucks above at around $72, $73. Now, where the area of resistance is, nobody knows, because like I said, right now we're in no man's land, but the best guess as of right now would be at about $76, $75, $76, $77, because that's our most recent all-time high. So right now, I think our support is at about, let's just say $68, $69, and I think resistance is going to be about $76. But I think we are going to be having a little bit of a pullback here because, again, I am short-term bearish. The RSI shows overbought. We're trading pretty far above the 21-day moving average. We'll have to wait and see if we actually break $68 tomorrow. I think if we break 68, then for sure we are going to test the 21-day moving average wherever it may be. Now, if we continue trading above $68, maybe the 21-day MA will catch up with us and kind of intersect and act as an even stronger area of support between the support level at 68 and wherever this 21-day MA is. Now, the other thing is I drew this long-term trend line, or I should say more mid-term actually. And again, we are trading very far away from that. I mean, this trend line as of today is at around $58. We are almost $20 above that. And again, the 50-day moving average is even further down below at $52. So I do think, like I said, that we are short-term bearish. I think we are due for a little bit of a pullback. I think Penn is a little bit overvalued right now, but I am more mid to long-term bullish because again, the overall trend ever since the lows in March is up and to the right. So Penn has slowly been increasing its share value over time. Now, the one last form of technical analysis I would give you of why I think there's a pullback is this parallel channel that we drew. So again, drawing a parallel channel from the recent lows in early to mid-March, incorporating some of the bottoms of these candles here back in July, back in August, and then using the tops of some of the more recent highs as the top of this channel. You can see back here in early June, also around mid to end of August, we are currently trading above this channel. So ever since about September 15th till today, we are again trading above this channel. Now you could say to yourself, well, why don't I just make this channel bigger and do this? And boom, all of a sudden we're trading in that channel. We're not really, that's not really accurate in my opinion, because you have all this free space here that's not really incorporating any data. If I make this channel narrower like I had it originally, you have a better fit of the trading range of Penn over a longer period of time. So again, you can see, we are far above this trading channel, which the top of, as of today, is around $65. And you can see that channel is also very close to like 63, 64 of where this 21-day moving average is. So if you were to ask me, and of course none of this is financial advice, I think maybe at some point during this week, today is Monday, so we have 4 more days left in the trading week, I think we will see a pullback on Penn to at least $68. So what does that mean for you? If you're a buy and hold trader or you're a swing trader and you're thinking about maybe buying shares of stock because you like the company, you're bullish on it long term, I would wait personally. Again, not financial advice, but I think it's a little bit overvalued. I would wait till at least $68 before I get in, because I think it's going to pull back to that point short term. Now, if you like to trade options like myself, if you're thinking about wheeling this ticker and you're thinking about opening up a cash good put, again, I would ideally want to open up cash good puts if you can bear it less than $63. If the premiums just aren't juicy enough for you, I would say at least do it under $68. Under $65 would be even better, because I think it's just a matter of time before we test this support level. Now, if you're bullish on it and let's say you want to sell covered calls, now might be a great time to sell covered calls, because like I said, I think it's overvalued. You can lock in some juicy premium, and even if the stock does pull back, well, great, you can collect max profit on your premium, still hold the shares, and rinse and repeat, sell more covered calls on it. All depends on how you decide to play this with shares, with options. What's your strategy? Longtime viewers of my channel know I'm more into Theta Gang. I'm not a fan of buying options. I love to sell premium. I love to collect max profit. If you're new to the channel, as always, drop a comment below of what ticker you want me to look at next. If you're not in our Discord server already, you're missing out. We are very active, especially during trading hours. And as always, if you have any questions or comments, if you agree or disagree with my technical analysis, leave me a comment below. I really appreciate it. And as always, happy trading.